Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for November 8th, 2016. I'm Frank Ochoa, aka PivotBoss. Happy Election Day. Here's a look at the daily time frame of the ES. The previous session was a significant trend day up. This was a huge gap up, major runaway. Something we talked about in the pre-market report yesterday was given the early gap up, any retest of 2100 and into 2103.75 could offer a solid opportunity for a push back to 2144s. That was the idea for bulls. And the bull scenario was that since these late bears came in and you got a big gap back above this key range low, you could easily squeeze back to the midpoint of the range, which is 2144, and even open up a shot to continue higher. However, we have to see how that plays out as we approach 44s, or should we approach 44s. So that's what we're going to look for. How is price going to behave now? Typically speaking, after you see a significant trend day in one direction, you typically see a digestion day this following session. And right now, that's what we're seeing. ES is trading 43% of ADR, average daily range. It's been averaging about 21 points per day over the last 10 sessions. And right now, we're trading in a 9-point range for the day so far. Holding above 2120, 2119 implies further strength. Failure to hold this level could open up a rotation to retest recent lows. Let's take a look at the intraday time frame. Given the fact that we had such an aggressive trend day up the previous session, the indication or implication is usually that you'll see a digestion the following day. And we actually saw price come up here above 2120 and kind of hold a little bit, stretch into the close, and now we're kind of back in the range. So we've already seen the range kind of begin to develop between 2131 and 2119, and we could continue to see a fade the edges of this range as we play out the rest of the day. So right now we have a range developing at highs. I would say it's a fade the edges type of early part of the session at least, but we could be rather quiet throughout most of the day. So again, you have to have great trade location. That means being patient for the edges, looking for rejection, and bringing it back to value. Flat VWAP, trading around overnight VPOC. Right now, rejection at edges give you a great opportunity to bring this back to value. Until then, you got to be very careful and pick your spots. All right, let's take a look at crude oil. Here's crude oil. You take a look at the higher time frame of crude. One thing we talked about was the fact that we had major resistance at 52s. If we weren't able to see acceptance at 52s, then we were going to come back to value. We got that move very quickly, and then price pushed through and below value, which opened the door to the potential of pushing back across the larger trading range. We've had this larger trading range that has continued to develop. If price cannot hold the 43s, which is the next area of support below, we could be looking at a clear drop into 39s, which is the next area of support. So 43s, big time area of support right here. We're seeing after this big drop, a little bit of a pullback into the pivot range, offering initial resistance that could offer additional selling pressure that pushes price through 43s. I would say an intraday test of 43s will offer a short-term bounce opportunity. Not quite sure we'll see that today, but just to keep that on the horizon, continue to watch 43s. So if we take a look at the intraday time frame here of crude oil, you can see here basically the previous session we were talking about fading new highs, fading new lows. Price got down below and then bounced right here, started to bounce off of S3 support. That was our singular buy opportunity the prior session, and you can see that eventually getting back to VWAP was seen, and then price went across the range into R3. So being patient yesterday was the way to go, and the one buy opportunity turned out to be a fantastic move. And now we got to see where the next opportunity is going to come from. Again, you got to be patient about the edges. Right now, 45s have been a significant area of resistance, and price attempted to hold above that zone in pre-market trading, but has since sold off down to S3 support. I would say a return to 45s. Bears want to keep that area offered for a shot at retesting 44.13. So right now we'll keep an eye on 45s as resistance. Above that zone, test the outer edge of the range, and we could be range bound yet again. All right, let's take a look at gold futures here. Here's gold. Something significant about gold is the fact that it's testing our 1280 area of support or potential support. One thing we talked about before was 1250 to 1252 was an opportunity to bring it back to 1305 to 1310. Once that area was reached, the implication was that bears were going to defend for a shot at seeing new lows. But bulls have one last area of support here to watch out for, and that's 1280. And right now, the market is holding there over the last session, but I believe that there is weakening support in that area. And if bulls can't keep it bid for a retest of these highs, I think you're going to melt right through that support and start pushing toward new lows. So right now, 1280 is a key pivot to watch. Bears continue to control that 1310 zone, which to me opens the door to potentially more new lows ahead. All right, let's take a look at the NQ. The NQ, very similar to the ES, had a significant gap up and a continued trend day up throughout the session. Very, very bullish move. I mentioned before I thought that there was a potential to see new lows here. We had been forming an expanding range, and I thought we had the potential to see new lows before we bounced. But again, anytime you trap bears on the lows of the week after a significant drop and you get a gap up, that is a surefire way to start squeezing some of those late bears, and that's what's happened. After a significant trend day, you typically see a digestion day. That's what we're seeing right now. So that implies to fade the edges of the range right now with an upward bias. Since we had a big squeeze up, the best approach is to buy new lows or buy fading the edges of the lows for a shot at continuing this thing up. Be careful fading highs because a squeeze could ensue at some point. So right now, very important. We've gotten a reverse off the lower end of this range. We're kind of marking our way up. 48.40 would perhaps be the top of this zone before it starts to reach some significant resistance. So we could have a little bit more upside here on a swing basis, but we got to see how the rest of the session plays out, especially with the election underway. Now, if we take a look at the intraday time frame here, you'll notice that after the previous session's gap up, big gap up, and then a continued trend day throughout the session, closing on highs, that's a super, super bullish trend day, and typically speaking, that digestion day has already begun and is underway. So we're looking to fade the edges, 47.81s. Any rejection up here can be a quick fade across. Anything in the 47.50 could be another quick rejection back up. So we're talking, 30-point swings on either side of this range, short term. And again, pullbacks are better buying opportunities than selling right now, given the current uptrending move that we're seeing. So let's see how this continues to play out as the election day unfolds. All right, that's it for now. Let's see how this thing plays out the rest of the session. Good luck and trade well.